Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So, today, me, Suaidah Farhana binti Mat Yasin, metric number 2113436, and Nurul Najwa binti Mahamad Najib, metric number 2116616, will be presenting on our group presentation. We choose topic 15, which is adoption and copyright of IFRS accounting standard. Okay, first thing first, we need to know the structure of IFRS Foundation. First, IFRS Foundation Monitoring Board, which consists of the public accountability. Secondly, the foundation trustees, and then accounting standard boards, sustainability standard boards, and lastly, interpretation committee. So the one that will be advised and counsel these certain people is the IFRS Advisory Council, which they will advise the trustee and also the boards, also the interpretation on certain action they need to do. So we need to know that IFRS is one of the financial reporting regulatory system and what it is. So financial reporting regulatory system is a standard accounting practice that use financial statement to disclose a company financial information and performance over a particular period. So usually it will be made annually or quarterly basis of the company. In simple terms, it is to understand how the money come to the company, and where the money will be used. So financial reporting is important to know the health of the financial of the company itself. So who will be using this financial statement is potential investors and banks, which they will be using this to determine the health of the financial of the company in order to invest and give loan to the company. Okay, moving on to the background of IFRS standards and IFRS Foundation. IFRS stands for International Financial Reporting Standards, which specify in detail how the company must maintain their records and report their expenses and income. They were established to create a common accounting language that could be understood globally by investors, auditors, government, regulators, and other interested parties. So, what is the difference of IFRS standards and IFRS Foundation? IFRS standards is the standards that designed to bring consistency to the accounting language, which is the language itself in the standards, and practice and statement to help the businesses and investors make educated financial analysis and decision. While the IFRS Foundation is the organization, a non-profit and public interest organization that established by a high developed and understandable, enforceable, globally accepted accounting and sustainability disclosure standard. So IFRS Foundation is the organization that make the standards, which is the IFRS standards. That is different. Okay, just a sneak peek of the topic at chapter 15. So the definition of the key terms in chapter 15, which is the adoption and copyright. Adoption stands for the action or the fact of legally taking things that not authorized by them and bringing it as one owns, or the fact that is being adopted. While copyright means the legal right of the owner of intellectual property. It will be explained later.
Now, I will explain the objective of IFRS adoption. The first one is to establish a universal language for the companies to prepare the accounting statements. Number 2, to make the accounting statements credible and transparent. Number 3, to establish accounting rules to make it easier for the stakeholders to interpret the financial statements irrespective of the business location. And last but not least, to assist companies in appropriately categorizing and reporting financial data. Next, the role and function of IFRS adoption. So, the role. The need to adopt these standards was born in order to obtain quality information in the financial statement, and the convergence of these financial reports can not only have a significant consequences in the figures but also in the form of presentation. Its analysis and interpretation that will ultimately increase the value of the organization, improving business competitiveness in relation to other companies and international markets. Next, the function of IFRS adoption. The first one is to ensure a high degree of accounting information quality through simplicity and comparability of the financial statement, which enhance the credibility of equity markets and promotes macroeconomic development. Number two, the adoption of IFRS also may lead to better financial reporting quality in terms of lower incidence of earning management. And last but not least, it will be a cost-saving strategy for development countries to adopt IFRS.
Okay, so this is the simple graphic that you can understand on the methods of adoption. So we can see there is single step to adoption, and then convergence or transition to adoption. So there will the difference is that single step adoption is just adopt what it is in the accounting standard and bring it in the company or in the country itself, while the convergence is the adaptation, which is there will be translation and some changes of languages usually will be needed in the convergence adoption. So the single step adoption need the reproduction of IFRS standard in the official gazette or standard setter website, and the resolution in law with no reproduction of IFRS standards in legislation. So the contracts of the single step adoption is the adoption license itself, contract, and then maybe applicable license for dissemination of IFRS standard in the country itself. While for convergence adoption, they need license to create local standards based, but still based on the IFRS accounting standard.
Next is the adoption licensing and agreement. So, a licensing agreement is required in all cases where the content of the standards is used by an adopting entity, including cases of convergence where only parts of the content are used to form local standards. So, the foundation will work with the adopting entity to facilitate such public access by licensing the standard with an adoption agreement. Accordingly, the foundation has two main licensing models, which is open license and waiver. So for open license, the foundation retains all rights in the standards but grant the adopting entity all rights necessary to translate, if applicable, and disseminate the standards for adoption in the jurisdiction. Next, for waiver, in limited cases, the law of the jurisdiction prohibits a third party from holding copyrights in the national legislation. In such jurisdiction, the foundation grants the adopting entity the rights to translate and disseminate the standard for adoption in the jurisdiction, and waives its right to enforce copyright in the standards within a jurisdiction in the official language of the jurisdiction. And the foundation enters into an adoption agreement to facilitate dissemination of the standards for public benefit in the adopting jurisdiction. Therefore, the standards published under an adoption agreement must be made available to users free of charge, with the exception of distribution in print, where the adopting entity is allowed to charge a nominal fee to recoup its costs. So, the standards published under such adoption agreement may be used for personal or professional use. Professional use of the standard means to use in the user's professional capacity. For example, in connecting with the business of providing accounting service for the purpose of application of the standards. Next, the adopting entity and third parties in the jurisdiction are not permitted to use the standards commercially under the adoption agreement. Commercial use rights can be licensed with a separate license agreement. So an adoption agreement requires the adopting entity to first translate the standards from English into the official language of the jurisdiction where applicable, in line with the foundation official translation process. Number two, to adopt the existing standards within a specific time frame. And last but not least, adopt each new standard by its effective date. This includes translated standards which must not have an effective date later than the effective date of the English pronouncement. Therefore, it is essential that the adopting entity from the outset establish a robust and sustainable translation process.
Okay, so IFRS Foundation is a non-profit organization, right? So they doesn't have any operating budget that have annually given to them. So how they got their operating budget is from two sources. It's voluntary contribution, any contribution or donation from any organization, and secondly is the self-generated income. So self-generated income comes from two sources also, which is the publication and licensing fee. So I will be explaining more about the licensing fee. So the foundation charge for the use of intellectual of property at a fair and consistent level, where the standards are published for adoption and the convergence in any country. The foundation will charge an annual fee, which is the licensing fee, approved by the trustee of the foundation. So this annual fee or licensing fee are set by the foundation based on the World Bank classification of economy. So secondly is from the publication, right? So the publication is where the IFRS Foundation have published books of foundation books, which is the foundation books will profit them in terms of charge fee and royalties according to the fees, licensing fee that have in the books. So, what is the purpose of this licensing fee and what it is exactly to protect? Okay, so the licensing fee is to protect the intellectual property of the IFRS Foundation and standards, which is there are three elements in the intellectual property, which is the copyright, trademarks, and non-compliance. So first thing first is about the copyright. So the foundation owns or control all the intellectual property, IP rights, also known as copyright. So in so the IFRS standards are in English and all other language. Therefore, it is its exclusive right to reproduce or to authorize other to translate and reproduce its materials. Foundation also owns and control all intellectual property rights in its trademark, which we'll explain later. So IP rights, such as copyright, provide a creator of original works with a certain exclusive right, which exists automatically from the date of the creation of the original work, including the right to reproduce, such as works to allow either to reproduce, translate, adapt, which is the convergence process, or otherwise create derivative works. So the foundation reserves all rights, titles, and claims up to IP rights and its trademark. The foundation does not assign its copyright to others. Usage by third parties of any of these rights is subject to a license agreement with the foundation. So, secondly, is to protect their trademarks. So, what is it? It is a trademark. It is a word, or phrase, or symbol, or design, or combination of all that identifies and distinguishes a certain goods. So the foundation owns a large number of registered and unregistered trademarks, also logos of the IFRS Foundation and standards. So it is to advise to please contact the foundation for details of the country where the trademarks are used and or have been registered. A jurisdiction may use the name of foundation and the trademarks to identify the foundation as the author of IFRS standard and to describe this. Okay, so lastly is the non-compliance. The legal remedy against infringement of intellectual property legislation, which include copyrights and trademarks, is an action for damage and account of profit of injunction to end of the infringement. Exploitation of infringed intellectual property rights constitute a criminal offence. So in case of any adapting entity or any its user infringe, oppose, applies or cancel, revokes or invalidate otherwise to jeopardize or threaten the trademarks belonging to the foundation should be entitled them to terminate the adoption or convergence agreement or license contracts to its sole discretion with immediate effects. So in case this adopting entity happen, it will does not comply with either the terms of this policy or any of the terms conditions set out by the adoption agreement. The foundation shall be entitled to terminate the relevant agreements between the company and its sole discretion with immediate effects. Okay, so finally and last but not least is the official translation process. So official translation process is a process that involved in the process of adoption. Usually it happens in the convergence method, which is when we do convergence method, we want to adapt with the country itself, with the language and so on. So they need the official translation process in the translation process. Okay. So it will be first starting with the foundation extract key terms from the standards for translation by the translating partner. There will be translating partner between the IFRS foundation and the party with the country itself or the company company translator. The review committee may add additional key terms as necessary if needed by their language. So the key terms are translated by the translators. Translated key terms are agreed by the review committee where there will be a few meetings to agree on the translated key terms itself. So translator use key term and existing IFRS standard reference material to translate the standards using computer and assisted translation software where it's possible. So lastly, the review committee reviews the draft and translation and text finalized, sent to the foundation for approval first, and then the approved translation will be published in that certain countries that want to be translated, which they want to use their own language in the convergence process.
So to conclude our presentation, we learned that IFRS accounting standard adoption bring a transparency by enhancing the international comparability and quality of financial information, enabling investors and other market participants to make informed economic decisions. Number two, it is also strengthen accountability by reducing the information gap between the providers of capital and the people to whom they have entrusted their money. And last but not least, IFRS accounting standard adoption contribute to economic efficiency by helping investors to identify opportunities and risks around the world, thus improving capital allocation. That's all from our group. Thank you for listening and have a nice day. Thank you.